Welcome to this very special business dinner, let's call it that way, in this very charming decor with some books, food, and a good ambiance. I'm really delighted when Professor Ranan Ryan, the Vice President of the university, asked me to moderate or to coordinate this evening. I was delighted, given my interests coming from the School of Economics and being a global and international economist on the issues of Europe, issues of trade wars, Brexit, you just name it, and it's all in the newspapers, in the Financial Times, and everywhere. It's a special honor to have with us Professor Dr. Ewald Nowotny, whom I will introduce, and the ambassador will also introduce in a few minutes, who will give a very interesting lecture on the subject of from trade tensions to Brexit. And the idea will be that Professor Nowotny will speak for about 30 minutes, and then we will open for Q&A, comments, suggestions, and so on and so forth. He just told me he looks forward to the whole discussion. But before that, we are delighted to have with us the ambassador of Austria to Israel, Mr. Martin Weiss. Martin has been ambassador with us, if I'm not wrong, for 3 years. He holds a master's degree from the University of Virginia in the US. And in fact, looking at your bio, I understand you spent a significant amount of time representing your country in various diplomatic, political, and foreign affairs missions of the Austrian government. Mr. Weiss has also been the Austrian ambassador to Cyprus, so that I think once he saw the weather in this area, he decided that he's not going back to probably to Washington D.C. or to the east. So delighted to have you both, and let us begin with some greetings from the ambassador. Thank you.
Thank you. Well, when you're ambassador to Cyprus, you become an expert for insolvable crises. I think that qualifies me for Israel, definitely. So thank you very much for having me here tonight. There's a Chinese saying where you wish to someone, may you live in interesting times. I think it sounds nice. It's actually, I think, a curse. But it's definitely true. We live in interesting times. A few days ago, we were at the brink of a war in Gaza, and for a little while, we were actually not sure if this lecture tour would really make sense and really happen at this moment. Now, a few days later, we're having a ceasefire is in place. The defense minister, Leiderman, is ex-defense minister of Israel. And we will see where this all goes. I was always looking forward to seeing elections in Israel, and I think I get my wish granted before I leave Israel. I'll be there. I'll be there, first row, popcorn and all. Another topic that, of course, has been very important and very interesting for us in Europe is the whole Brexit negotiations. You mentioned the word Brexit. This is something we negotiated for a long time. We will see how the end game will play out, but we have an end of negotiations on our table. And I think this is definitely the defining moment for Europe, probably even more so a defining moment for the United Kingdom. A few days ago, you all saw the pictures from Paris, where world leaders gathered in Paris to commemorate the end of World War I, 100 years anniversary. That's quite something. And we saw the United States president tell the French via Twitter that they would all be speaking German if it were not for the good old United States. Definitely interesting times. But underlying these political developments, there's of course always an economic reality. Or as Bill Clinton once famously put it, it's the economy, stupid. Which is not to say that the economy decides everything. But definitely the conflict in Gaza, for sure, Brexit, French-US relations, there always is a economic determination in the background. And the economic considerations are always decisive factors and even drivers. I guess this is the long way of saying it's great to have Ewald Nowotny here with us tonight. Governor Nowotny is a seasoned economist. He has been the CEO of a number of Austrian banks. He was the vice president of the European Investment Bank, is the governor of the Austrian National Bank, and thereby member of the governing council of the European Central Bank since more than 10 years, which means that he has seen a crisis or two and has been in the engine room of the European economy. And let's be frank, he and the board of the central bank has steered us quite well through difficult economic days. Some people say that it was really more the economists than the politicians who made the right choices in those crises, but be that as it may, it's great to have you here tonight. The EU and Europe often come in for a lot of criticism. We see it in Israel a lot. Europe is so naive. It's so bureaucratic. It's so slow. It is a series of compromises which never come to a solution. But I mentioned the 100th anniversary of World War I, and we have seen what the alternatives are to this eternal compromising machine, and I think we would rather not go for the alternative. And that, I think, is also something which really disturbs me when it comes to the Brexit debate, that you have this argument of the national state reigns supreme and every compromise is a weakness. To me, that seems a very yesteryear way of looking at things. Europe has seen a very long time of peace, of prosperity, of stability. Commission President Juncker the other day said in an interview, Europe is the greatest place on earth. Sorry, he didn't mention Israel, but he said Europe is the greatest place on earth. Everyone knows that except for the Europeans. And I think he hits the nail pretty much on the head. Thank you all for being here. Professor Ryan, thank you very much for the cooperation. We met a number of months ago and said it would be really great if we could do something. Well, we are not all talk, we are also action. Tonight we do something. We have this part with Governor Nowotny at this seminar. I'm really happy that it all came about. Thank you for your attention. Have a great evening. Thank you.
Thanks very much to Ambassador Weiss for these very warm words. There is little to add to the introduction to Professor Nowotny. I just want to mention that he's not just a typical governor of a central bank, in the sense that he's really, he blends or integrates together different characteristics, number one, someone that comes from academia. He's a full professor at the Vienna University of Economics and Business Administration, where he has also been the vice rector. Second, his long experience in business as the CEO of several banks and other entities and vice president of the European Investment Bank, as the ambassador just mentioned. Third, we have the issue of being a policymaker, of course, not just at the central bank, but in other entities in the public sector in Austria. But fourth, maybe some of you don't know that he was a member of the parliament in Austria for 20 years. So, you know, here we have a central banker that in his mind mixes and blends all these characteristics which make him a very practical central banker. And another very interesting fact about Professor Nowotny is that he was appointed for his first term. He is now in his second term as governor, nothing more or nothing less than in the month of September of 2008. In the middle of the major global financial crisis. I wanted to ask you, was it after the 15th of September? Before? You will talk about it? Because as we know, September 15th, 2008 is the collapse of Lehman Brothers, the very famous investment bank. And that is the time when you saw panic develop in all financial markets and all the banking industry. So quite a challenge you took, Professor Nowotny. So without any further delay, let me hand over the microphone to you. Thank you very much. You hold this in your pocket, or you just...
should take it.
You just put it because they are taping in video. We will also move.
So, dear Professor Leiderman, Ambassador Weiss, dear colleagues, thank you very much for inviting me. I think this is a very charming format. So it's like the old Greek idea of the symposium where you sit together. I think I'll try to introduce this to Austria. Just to mention these two things. Yes, my first appointment was for the 1st of September 2008. And before, I had been called as troubleshooter for a bank in Austria, the third largest bank, which had got into trouble. And I was able to solve this. And then the government said, well, Mr. Nowotny, so thank you very much for saving this bank. And now you will get a very honorable, peaceful, and nice position. We will appoint you as governor of the central bank. So I started September 1st, and as you said before, September 15th, Lehman collapsed. So it was honorable, it's true, but it was not peaceful at all. So we had, and I really have to say that these were times when we had telephone conferences almost daily at the level of the ECB, and where there have been times where we did not know whether the financial system of the world would survive, because something had happened that both in theory and in practice nobody had expected: a total breakdown of the money, of the worldwide money market. Because this is the problem, and I think this is still not fully understood by some. The essential element of for banking is trust. And there was, of course, the idea that a bank of a certain volume is, in fact, too big to fail. And now, suddenly, one major bank was allowed to fail. And nobody knew who would be the next. And therefore, banks just stopped lending to each other. That meant banks got into a liquidity problem. Therefore, banks stopped to give loans to their clients. And this was kind of an avalanche that could have led to a meltdown of the system. And in fact, this was when the central banks, in a coordinated action, de facto acted as a substitute for the international money markets by offering to the banks liquidity, that means loans, without any quantitative limits. So whatever you need, you will get. And that was the way how to save it, and that was the crisis element. I won't get into more details, but I just wanted to add something else, because you said it's rather rare to be a central bank and an academician. I have to say that this is something very common. And in fact, if I look at the Governing Council of the European Central Bank, I think more than 50% of the governors have an academic past, including our president, Mario Draghi, who had been studying at the MIT and then had been professor in Italy. And in fact, I have to say, you in Israel have, of course, a wonderful tradition of having eminent economists as governors of the central bank. Of course, among them, Stanley Fischer, who was the teacher of Draghi, and who, by the way, when I have been at Harvard, I was also had a chance to attend his lectures at MIT. So this is just to say this in the academic context. This is why I like to be a central banker, because there is no, at least I think, there is no field where theory and practice are so closely connected as in the field of monetary policy. And I have in my, is this okay with you? Because should work. Oh, so I see, this way. Okay? Yeah? So and I have to say, as you said, I had in my life, I had to attend many meetings. I think much too many meetings. But the most interesting ones are the meetings also today of the Governing Council of the ECB, where you really have also discussions with mixing this theoretical aspect, where we really discuss new articles in scientific journals, and say, well, how is this to be seen? What could be the effect? So this just is a little first element. If I may, to speak about some of the international aspects, the global crisis that I discussed before is to a certain extent is over, but there is a lot of nervousness. We just had some weeks ago the meeting of the IMF, International Monetary Fund, and there the repeated wording from Christine Lagarde had been, you have to repair your roof when the sun is shining. I think this is not such an impressive wording in Israel, where the sun is shining almost all the days. But for the rest of us, it really meant, yes, we are in kind of good times, relatively good times, but prepare for the worst. And so that means in two ways. The one with regard to monetary policy, try to get into some kind of normalization of monetary policy again, so that you have room of maneuver if things get more difficult. And with regard to fiscal policy, try to reduce your reliance on deficits, so that again you have room of maneuver if things get more difficult. What you see here is that the US have had the strongest economic growth. Of course, with coming at some costs, and the euro area, and just, I hope this is okay if I go here. The euro area had been more or less in parallel with the rest, and then you see that in 2010-11 there was in Europe another downswing, and we haven't fully kind of recovered from this compared to the UK, to the US. And this downswing was caused by a policy change of the ECB, by increasing interest rates. And this is something that we discuss very actively today, because it was quite clearly this was a policy mistake. And we are now it's a very difficult discussion. If we would now get more restrictive, would that be again a policy mistake? Or are we perhaps behind the curve already now? So this is kind of something that is very relevant for our discussions. Of course, what you see is with regard to fiscal policy, and always public debt is a percentage of GDP. Of course, you have these huge numbers in Japan, which are not a problem. This is the strange thing. It's because it is all internal debt, and de facto, the central bank always can print money to cover it. So therefore, that could create some problems of inflation, but as you will see, inflation is not really the problem we have today. On the other hand, you see that, for instance, the US, they have increased. It doesn't look so dramatic to increase from 100 to 120% or so, but it is quite something. But again, one has to be aware. The US have their own currency. Their public debt is more or less 100% in US dollar. So the real problems for the American fiscal policy may come from the policy side. And if you have seen shutdowns of the US government, they are politically oriented, but not because they could not finance the deficit. For Europe, things are different. A national government in Europe, let's say the Italian or also the German and so, has not an own currency. They cannot monetize their debt. So that means, in theory, a single European country can go bankrupt, because this bankruptcy means that you have to make payments in a currency that is not your own. And this is the big difference between the US and between individual European countries. And on the other hand, if we would have a European government with access to the ECB, that would be different. But this is exactly what is forbidden. So therefore, one has to understand that behind these relatively minor differences, there is a very big, substantial difference that we see. Monetary policy, as such, was trying to, as I said before, we acted in the crisis in a very active way. The US faster than the euro area. Then you see this is the split where we, as we see now, prematurely started to increase interest rates, and then of course all went down. And today the ECB has an interest rate which is called which is the interest rate that banks have to pay when they deposit money with the ECB. So the deposit rate is even negative. It's minus 0.4. Whereas on the other hand, the US has already started to go up. So that is kind of a normalization. And what you see here is also that rarely has there been such a big difference in the interest rates, in the monetary policy rates, between the dollar and the euro. And this, of course, again, has a number of effects because it's an incentive for capital flows to the US. This means that there is an appreciation of the dollar and a depreciation of the euro, which means, on the other hand, that American exports get more expensive, so that in spite of all what Mr. Trump tries to achieve, we have just now the situation that the current account deficit of the US vis-à-vis Europe is increasing, not decreasing. Because the exchange rate effect is more important as compared to the tariff effects. These strong actions from the side of the central banks also had the effect that the balance sheet of central banks has been growing substantially. Again, this is a bit statistical with this Bank of England, but you see the Fed. You see the Fed acted more strongly, but then it has now turned in the normalization phase. Whereas the euro system first again prematurely normalized, and only now then has entered this phase of what is called quantitative easing. That means buying of bonds, of mainly government bonds. As I said before, the IMF is still positive, but with some caution, and especially this is the World Economic Outlook, and these numbers, since they have been published by the IMF, had already been revised downwards. So for the euro area for 2018, we are now in the range of 1.8, 1.9%, which is quite a substantial downward revision. And in fact, which has a number of reasons. The main reason, but also the main uncertainty, is the economic development in Germany. There had been a strong downward revision in Germany. The first quarter of this year for Germany had been negative, a decline of the GDP. But the general feeling is this is not an indication of an upcoming recession. This has very special effects, especially in Germany. There are troubles with the car industry, and these are with new testing, so they are just technically not able to sell cars for the moment. So basically, the basic idea is that we will reach this 1.9, 2% basis. But as I said before, it is a bit vague. Where things are more dramatic is, of course, Italy, and I will talk about Italy later. Perhaps just to mention here about a notice about my own country, Austria. We have a growth rate of about 3%, so we are clearly above the euro average. And what helps us in this case is that we have very high growth rates in the countries of Central Europe. Poland, Czech Republic, all above 4%, Poland 5% growth, Hungary. And of course, this region plays a much bigger role for Austria with regard to our export business than other regions, especially also the US, where there is, of course, a certain negative effects. What is also relevant, and this is what I said before, is the role of the banks. So the financial crisis that we had starting 2007-8 has been a banking crisis. And we have had in the meantime a huge number of new regulations with essentially with the effect of increasing the capital requirements. So this is what you see, Tier 1 capital. This is the own capital of banks. And this is the best safety belt for banks in a crisis, that you have enough capital, and of course that you also have enough liquidity. Here, and I think one can honestly say that today the banking system worldwide is in a much better shape than it has been 10 years ago. What is a bit makes us a bit nervous is that, especially in the US, we see a tendency of, again, of certain deregulation. And one of the reasons for the big crisis had been a too far-reaching deregulation. So then we had re-regulation. Now we have again a bit of tendency of deregulation. And that is something that could weaken the safety structures. And especially we have just now, without going into details, a very strange new law in the US that would make it more difficult for the Fed to intervene in case of a crisis. And this is points to another basic problems that we have to discuss in the context of central banks, but also in the context of crisis. What is the meaning of the independence of central banks? And yes, there is of course an argument that central bankers are non-elected officials, that their actions may have huge effects on the life of the public man, so you should control them. And I agree that there is, in any case, there should be some kind of responsibility towards parliaments. But, as we have seen, in a crisis, the essential element is to react fast. And this is what we have seen. The political process never is a process that can act fast, or that does act fast. So therefore, especially this role of kind of fast action from central banks is something that has to be preserved. Otherwise, we really it could mean that if another crisis comes, the capacity to be helpful would be quite strongly reduced. One element that is also relevant for the topic of today, which has been hiding now. So, and yeah, here we are. No, yeah, exactly. This is the situation of emerging markets. And this is a bit frustrating for an academic economist, because this is a story we are teaching our students again and again. But obviously, if the students become older and are in politically relevant positions, they tend to forget it. And the point is that if there is a boom and you are an emerging economy, there is always the danger that you start to import money, cheap foreign currency money, because it's cheaper. You have investment boom. This investment boom is financed by cheap foreign short-term money. And we are very glad because you have a substantial boom and everybody loves you. The problem is, if something from the outside occurs, this cheap foreign currency will leave the country very soon. And then you are stuck with a currency crisis. And the typical element that is causing such a crisis is a revaluation, appreciation of the US dollar. And we had a number of crises. We had the big Mexican crisis due to appreciation of the dollar. We had the crisis, the Asian crisis, due to the appreciation of the dollar, short-term money fleeing the countries, because if the dollar exchange rate goes up, it's much more, and so this is usually connected with an increase in the interest rates from the side of the Fed. It becomes more interesting to invest in the US. And exactly this is what is happening now. And so what you see is that a number of countries have had a situation where their exchange rates went down substantially vis-a-vis the US dollar. Of course, the most dramatic one, Argentina, also Turkey, Also, Turkey is a complex case. There are more problems than just this one, but this is also one of them. It's always the same: short-term money in foreign currency. And by the way, because it is such a repeating problem, the IMF envisaged proposals that are totally new and kind of strange for the IMF ideology. That means capital controls. In certain elements, the IMF says, because if you have this boom element, it's very difficult to stop them. Even in Brazil, they try to stop it by having extra taxation. But if there is a boom, they just go along. So even the IMF, for these cases, discussed the role of capital controls, and I think this is something that will be of quite some relevance for us. I will skip China. We can talk about it later, but come to Brexit. As all of you all know, there had been now. Nobody knows exactly what it is. Something like an agreement. It's not so easy to fully understand what it means. At least the interpretation that I have been given at a meeting in Frankfurt was that it is in fact kind of a customs union, which means that, of course, the political responsibility lies with the EU, but the customs union, including all of the UK. But has the effect, of course, that there is no border then between Northern Ireland and England. That, on the other hand, for Northern Ireland also to become a member of the European single market, or remain a member of this European single market, but not the rest of the UK. So, and you know, for the European single market, there are these kind of famous 4 freedoms. That means, I think freedom is too big a word. It's flexibility for capital movement and for personal trade movement and for persons and for services. So that for this there would be a different regime in Northern Ireland and in the rest of the UK. Nobody knows whether this is the last word, whether any political solution will come at all. If you look here at the relationship, the trade relationship between UK and EU, you see that both for goods and services, the EU, which is the blue, does play quite a relatively strong role for Britain, whereas on the other hand, for the European Union, both in goods and services, our exports to UK are of course substantial, but not really of a decisive scale. So that in that sense, if you look at the power structure, it's quite clear that the EU has a stronger hand to play in this field. There is one field where it is very sensitive, and this is exactly the field of financial services. London still is the second most important capital market of the world. For a long time, it was the financial center number 1. It has now been overtaken by New York. And in fact, I think the biggest winner of a Brexit in the financial sector will be New York, and not Frankfurt. But still, being the second biggest financial center is of huge importance for the rest of Europe, because much of the foreign exchange trade is done there, many other activities. So therefore, we as the European Central Bank, we have a huge interest that in the potential case of a hard Brexit, there is no disruption, and that these financial services, to a certain extent, can also go on in London. A special case of special importance is the question of legal continuity. Many of these countries are, of course, British law, so that they are kind of honored also in the future. And I think we will be able to find a solution for this, but one has to be aware that even if, let's say, to add 1 year or 2 years is only possible if there is some kind of a treaty. Without a treaty, you cannot have kind of additional elements that might help you. So that is something that is of quite a dramatic element. Many banks have reacted, so there is, of course, many banks are moving part of their activities out of London to Frankfurt, many of them to Paris, which is, I think, for London Bank a nicer place to be than Frankfurt. And by the way, where the French government has made a very special approach to grant tax privileges for the bankers, which, by the way, one has to say, are tax privileges that these bankers had also in the UK. One has to be, the hidden truth is, it's not just about the wonderful efficiency of this financial center, London. It's because they have really far-reaching tax privileges, and this makes this place a very attractive one. What are the final effects? Here I have brought to you and this is from the IMF, estimates of the long-run effects on GDP in the UK, and you see you have all kinds of possible answers. Nobody really knows. And from very negative studies, by the way, by the German Bertelsmann Foundation, to kind of slightly positive one, I think we are. If you look at it in a serious way, it's very difficult because we are in the dark, so we really don't know exactly what will be the solution. But in any case, it is something that has the possibility of being quite dramatic. Last point I'd like to share with you is. Last but one, is the situation within the eurozone. And of course we have to be aware that in the eurozone we have very different economic stories, and we have some countries that even in 2017, where the GDP, the real GDP, had been below 2007. That means stagnation for 10 years. By the way, in the meantime, Portugal, which is kind of a success story, now has reached a certain amount of growth. So they have, but of course you see Greece, a dramatic decline in Greece, and you see Italy. Italy has had economic stagnation since more or less de facto stagnation for 10 years. They have now, the government has very optimistic growth forecasts. The IMF and EU Commission and so on is in the range of 1% or something like this. So that means this is not very far away from stagnation. This has very negative effects on employment, high youth unemployment, and of course also with regard to the budget. And this is, we have just now, of course, this discussion between the EU Commission and Italy with regard to the new budget proposal. And I think it makes sense that the Commission asks that rules should be followed, but it's a sideshow. The real point is the dismal growth perspective in Italy. And behind this, there are, in fact, a great number of structural problems. But also may be that, of course, just to rely only on austerity is perhaps also kind of problematic. And this is what I mentioned. Portugal, I think, is a country that also had been in a deep crisis, where there has been a program from the side of the EU, but then with a new government had a kind of a mixed approach, which I think is some indication what it could perhaps achieve in this way. Just to show where the real problems in Italy are and will be, this is not this dispute with the EU Commission. This can go on for years. What cannot go on for years is the need to finance the budget. And Italy, as I've shown before, has a very high percentage of public debt. That means they have to refinance this public debt. And if you look at these numbers, in 2018, they have to refinance 377 billion euros. Most of it just by refinancing, or they have to go to the markets by refinancing outgoing debt, and of course to finance the new budget deficit. That means, very simple, somebody has to be prepared to buy Italian bonds. And this is, of course, something that gets more and more costly. So we see interest rates are going up. Also, we just see a certain stabilization just now. So obviously, there are some institutions that are prepared to buy. But the group that was up to now the most intensive buyer had been the Italian banks. Which means that, of course, a part of the problem has moved from the government to the banks. Because, let's say, if there would be a downgrading of the Italian government, that would mean a downgrading of the Italian bonds. That would mean that there is a need for new capital for the Italian banks. So therefore, and we have had a meeting also last week in Frankfurt with the leading CEOs of Europe, but of course the Italian CEOs understandably said they don't see much of a chance to buy government bonds in the quantity as up to now. And so there's the issue: who will buy? One thing that we have learned from the crisis is, if things really get very tough, there is a buyer. There is somebody who is prepared to be helpful. And we have created something like a European IMF, the ESM, but this is help that comes with conditions. That means a government has to be prepared to accept a set of conditions. That means usually a government may not survive such a situation. And this is the situation we are just in. So we do have a number of problems, but what I wanted, this is where I want to end, is we also have a number of solutions. And I think we should not forget and overlook that in these last 10 years, at the European level, we have made huge progress in forming new and stronger institutions. The one is this, what I mentioned earlier, this ESM, European Stability Mechanism. this is kind of European IMF prepared to lend to countries that are shut off from the markets for some time. But, of course, it's not a gift, it's a loan, so therefore there are conditions. Another element is the European Banking Union with kind of 3 pillars, and the first pillar is the single supervisory mechanism. This is an enormous progress. Since these now 4 years, the 222 biggest banks of Europe are directly supervised by the ECB, and these 222 banks amount for about 80% of the total capital of European banks. This is something nobody would have thought that it is realistic. We have made it. I think it is a big success, and it is combined with common European regulation and common European definitions. And only now you really can compare the real economic situation of a banking system. Alan Greenspan, the former president of the US Fed, once said, only if the flood recedes, you see who has been bathing naked. And now, of course, with common definitions, you see that some of the banks are in a worse situation than they had been according to the official statistics of their own supervisors. And the whole discussion that we have in Europe now about non-performing loans, mainly an Italian discussion, is of course an outcome of this. But this is a progress, because now we really get the real numbers. And it is, you can have no rational politics without relying on real numbers. So I think this is a very big success. The second pillar is the single resolution mechanism. We have had in the crisis the situation that if banks got into troubles, there had to be bailouts. There has to be been a bailout by the government, this means by the taxpayer. And at this time it was also absolutely necessary, because otherwise you would have had exactly this Lehman effect. But of course this is not something that is sustainable, politically sustainable in the long term. So therefore this resolution mechanism means that also the owners of the bank have to pay in, that the creditors of the bank have to pay in. This is what we call, instead of bail out, bail in. It is a difficult process, but I think it's going to work. And then what we are just now also discussing, and we have on the first steps, this is the Capital Markets Union. That means because in Europe, the main bulk of financing activity is via bank loans. This is different in the US. In the US, it's what's called a capital market-based system. Therefore, the main financing is via the capital markets. We will not have the same situation like in the US, because we have more small and medium enterprises and so on in Europe, but still we need stronger role for capital markets, which needs a lot of legal changes and so on, but this is something that is going to happen. So this is what I wanted to give you a kind of overview of some of this interplay between international forces and national forces and supranational forces as we have with the ECB, and I look forward to the discussion.
Stay here. Thanks very much, Governor Nowotny, for your vision. To share so many topics in such a broad, with such a broad view. we have some time for 2, 3, 4 questions. So if it's okay with you, we can collect them.
Yeah.
Let's collect them, and
Okay.
then you decide in terms of time allocation. I have some very good news for you. The food is still here, so you are more than cordially invited to. This is a business dinner, so please go on. There is some fruit and some dessert, and so on and so forth. So please, the gentleman here with your first question.
I just want to say, I hope I have not destroyed your appetite. So please.
Or maybe we're even more hungry now.
Oh yes, then it's okay.
Well, you convinced us that we still have the sunshine,
Yeah.
so the crisis is not here
Yeah.
yet. Yes, please.
Okay, Andrzej from Czechoslovakia. Fantastic insights. I thank you very much. You showed one chart. There was a Poland and Hungary, but you didn't explain details, and it was like showing high level of debt, I think, because we know that Hungary and Poland shows now high GDP growth. So what was it about? Yeah, that's it. So if you could elaborate on this, because it's very interesting, you know, this contrast between the GDP growth now and this information there. Thank you.
Okay, second question, please.
Yeah, my name is Jenna Klotzkin. I'm a journalist from Germany. And therefore, I'm interested, you said that Frankfurt wouldn't be the winner, but New York. So I would be interested, why is this so? And what are actually the indicators for saying that, what are they winning? I mean,
Okay. Yes.
My question is the European Central Bank looking into the challenges that it will face when blockchain and new technologies will change the scenario?
Yes, please.
What will be the newly agreed upon the appointment between Germany and France regarding the common euro budget?
The common
Euro budget.
Euro budget.
Euro budget.
Yes, exactly.
Okay. Yes, please.
The question is relevant to demography. My name is Bill Kappes from the University of Watney. Aren't demographic developments in Europe implying that some countries, if not the entire continent, will never recover in terms of debt to GDP ratio?
Okay. And I'll take the liberty of being the moderator to ask you the following. I mean, it would be interesting for us to hear a little bit about the labor market in your country, the situation of employment and unemployment, and in particular the issue of migration that has been, you know, when Britain goes to Brexit, politically the motivation was because of migration. At least that this is the way some middle classes in the middle of England were convinced that they have to separate from the European Union. And so it will be very interesting to hear from you what has been the policy of your country. Do you face a shortage of workers, you know, in Israel nowadays? With a strong economy, one of the key constraints we have is the lack of working hands in all fields, from engineering to the housing sector. So I think we have enough to keep us alive until midnight, and then breakfast will be served. So let us try to cover everything in 10 minutes, if it's okay with you.
Yeah, I'll try.
Okay.
First, this external debt for Poland and Hungary. Well, as you know, both in Poland and in Hungary, there have been times when there had been a big crisis, when especially Hungary was close to having an IMF program. So there was, and in this time there was accumulation of debt. Now, both Poland and Hungary have much lower deficit numbers, so that is not growing any longer. Frankfurt and New York. Well, the advantage of New York and the advantage of financial markets is that just to be big, because that means interconnectedness. Where you have to be legally with under EU law, then of course you have to go into EU territory, which is, for instance, and then Frankfurt, Paris, or so on. In those cases where you are not directly under EU law, for instance, FX markets, there you are free to go. A big element is investment banking, where also there is no legal obligation to be within the EU, EU or the euro. So therefore, at least up to now, what we have seen, this may change, but I think it's sometimes overlooked that there's kind of a laughing word about it. Concerning blockchain and yes, of course, all of our central banks, we discuss this in the context of what's called cyber money. And one has to distinguish. There is money, or let's say Bitcoin. Bitcoin definitely is not a currency, because a currency has to fulfill certain economic perspectives. It has to be a store of value. Bitcoin, of course, is never a store of value because it's widely fluctuating prices. It has to be a means of payment. It's very complicated to pay with Bitcoins. So we think Bitcoin is it's just a speculation. It's like going to the lottery or something like this. And many people love to go to the lottery, but it has no real economic foundation. A different thing is the blockchain technology as such. This is something where we do discuss it, and where there is a discussion about cyber money in real money. That means in central bank money. We have had one very bad example. This was in Venezuela, which was also just trick and fraud. But basically, it could mean, if you look at it from a just technological point, that it would be an additional, that means a third way for central banks to interact with the public. Now, central banks produce money in the form of cash. This is with the public, and in the form of payments with banks. But we have no private person can have an account with the central bank. With cyber money, the idea would be that everybody can have an account with the central bank, and that, of course, would be a very big change. And therefore, just recently, again, my friend Benoit Curé, the member of the executive board of the ECB, was warning us. Yes, that might be something that is of interest, but it's much premature to think that this is something realistic just now. So yes, we look at this, but cautiously. EU budget. Well, I'm a simple central banker, so I have not much to say to that. But one has to be aware, and even in the presence of a German journalist, I dare to say this, that we are, of course, under very special, let's say, control of the German public opinion and the German courts. And as you may know, there were again and again some activities from, I would say, a bit crazy German professors who went to the German Constitutional Court. And then the German Constitutional Court, rightly so, went to the European Court of Justice for a final say. And the European Court of Justice agreed that what the ECB is doing is correct, but on the other hand, he gave very strict rules what the ECB may do. And so therefore, I think we have more or less exhausted our legal possibilities. With regard to the budget, the German Constitutional Court had this famous saying, the right to agree on the budget is the crown jewel of democracy and of the national parliament. So it will be very difficult to move this, because it would mean a constitutional change in Germany, which is not feasible just now. So therefore, I think that this idea of a European common budget as such makes a lot of sense, but is not realistic. What might be a situation is that we have some specific elements of common activities. So, for instance, let's say border protection. To have specific, and we have now this, just at this moment, we have the discussions about the new EU budget. So this is not a budget, let's say, integrating the national budgets, but this is just the normal EU budget. Austria has just now the presidency of the EU, of the Council of Ministers, and against my strong advice, the Austrian Minister of Finance has the ambition to lead these negotiations himself, which means he is never to be seen in Vienna. And it is a very difficult element. And it might become more difficult because there is a connection with Brexit. The UK is the biggest net finance provider of the EU. If Brexit happens, and it is a hard Brexit, of course this money will not be available. If it is a soft Brexit, the UK will have to pay. And in some way, as you may know, also Finland or Switzerland, they are not members of the EU, but they still pay into the budget because, of course, they use to get access to this huge European market. But this is, and this is then connected with the aspect of structural and regional funds, especially to countries of Central and Eastern Europe. Because the one position could be, well, if we have not less money, we can spend less. Where can we spend less? With these funds. So that could mean that Central Eastern Europe are the main losers. Of course, they put an argument for why we have a huge, very costly agricultural programs. This again is the special interest of France, because France is the big winner of the agricultural policy of the EU. So you see, whatever you do, you can have a lot of difficult points, and so also you can mix this with other issues. As you have heard, I have a bit of experience in politics, and one of the approaches of politics is mix as many issues together, and then perhaps at the end of the day you get some results and minimize because nobody really knows who is winner and who is loser, and this is the only way how to get it done. This is maybe something that might come out, but it's still open. Demographic developments. Well, I think there has been a bit quite a change. We have had forecasts that Europe, the population of Europe is shrinking fast, which is not true. We have had quite substantial migration. Austria, for instance, in about 15 years, will have almost 1 million inhabitants more than it has today. Vienna which had been a town of which had been a town of 2 million inhabitants at the time of the monarchy, then was shrinking to 1.5, and in again, let's say 15 years, will reach again the 2 million mark. So this is not the real, but what is of course true is that the age structure will change dramatically. And this has, of course, a lot of effects for securing the pension system, also for voting behavior, because maybe the elder population has other interests than younger ones. So therefore, yes, demographics will have a lot of effects, but not so much, I think, on the economic side. Last point with regard to labor markets. Well, the real expert on this would be my wife, who is sitting here, because she had been a Director General of the Ministry of Social Affairs. But if I may improvise a bit, and please correct me, we have had a very high influx of foreign labor in Austria. Not only migration, but we have a very long open border with, let's say, Hungary, with Czech Republic. Also, Czechs are not very mobile, so but we have huge numbers of, let's say, Slovaks, Czech, Hungarians that just come as overnight to Austria, and therefore, of course, meaning that they spend their money in Hungary and they earn it in Austria. So we have had, of course, the opening up of labor markets, EU labor markets for Romania, Bulgaria, and so on, had a huge effect. By the way, always before underestimated by the economists. So this is really quite interesting, an element where one has to see. Also, I have to say, the Academy of Science made forecasts that unfortunately were much too off the mark. So this is quite a substantial issue. But to say this very cautiously, the integration of those coming from Eastern Europe never had been a problem in Austria. We have, this is a tradition, they are parts of the old monarchy. My own name is Nowotny, which is obviously a Czech name. So this never has been a problem. What is a certain problem is, of course, with groups that have very different social background. This is coming from Turkey, and now, of course, quite a number of the new migrants. And this is causing certain problems. But it is a fact, so therefore I think it was just wrong to say, well, we don't want it, we have it. So I think the task is to do what we can for integration, for schooling, and in some ways we are successful, in others not. And as you know, we have in Austria, like in other countries, also a political reaction, which is of course not very helpful in this field. With regard to the labor market, we have had, as I said, a strong influx. So therefore, the supply on the labor market has growing very much. Demand has also been growing, but not at the same space. So therefore, that for a certain period of time, unemployment had been growing. Now, with the economy being in a very good shape, unemployment numbers are shrinking, but they're still higher than they used to be. With regard to labor shortage, yes, there is, of course, in some elements, but we have one element in Austria where we are pretty proud about it. This is a very intensive system of vocational training. So that at the age of 15, young persons going directly into to work, but also go to school. And this kind of vocational training means that we have a very substantial group of well-trained workers. And this is, in fact, today one of the most important elements of international competitiveness. And what we see in Austria is that we just now, with artificial intelligence, with much more capital-intensive production, labor cost plays less and less a role. It's labor quality. And therefore we see already relocations of productions, of investments, for instance, from third world countries to Austria, but to Europe in general. In Budapest, Budapest is, for instance, profiting very much from the very high mathematical standards that you have there, so that we have relocations from India. India, you know, the mecca of IT industry, but some of them are relocating to Europe. Again, not only because they are better educated, but because they are part of the European labor market. And I myself, I have been CEO, as you know, of banks. I know it is extremely difficult if you have IT personnel, which has to be exchanged every 3 months because the labor permit is expiring. So therefore, I think this is something where it may be a problem on the global field for countries like Austria, like also Hungary, Germany, with a good educational system. I think they will be on the winning side of this.
Thank you very much. So I feel that you worked hard for more than an hour, and we learned a lot. And so thanks to the ambassador for coming over. Thanks Governor Nowotny for this very impressive and comprehensive lecture. I think, as I said before, we have all learned a lot about economics, politics, and so on. And we of course, we close with these challenges of the unresolved Brexit, the unresolved. Did you notice that the governor didn't mention Donald Trump? That was a very that was a very diplomatic approach. But trade tensions appears in the title, so you can understand it there. So thanks everybody. Thanks to Professor Ranan Ryan for organizing this and being the main host of this event. And have a good evening.